Hey guys, welcome to the Sharks Academy's weekly market analysis once again. And for today, we'll be going through the major pairs and I'll be looking at the daily time frame to begin with. So let's start off with the Aussie yen. Okay, so you can see currently we are sitting on a supply area. Alright, so this is let me take a look. This should be a weekly supply area. As you can see over here, we have an inside bar. And this is our supply area. So what are we looking for at this moment? Because you understand that we do have a break of structure over here. Right. So if you are trading this sell move, we should expect prices to hit lower into liquidity lows over here. Right. So these should be our liquidity lows. However, we understand that we are looking for confirmation inside of here instead of just looking for sells right here. Okay. So on the weekly time frame, we are going to scale down to the 4 hours to look for the first sign of break of structure, which if you see over here, if we were to track the lows, the only time we can get a break of structure on the 4 hour time frame would be this area over here, right? So right now, we expect a move down that break structure, right? Then probably catch sells downside. Otherwise, just wait for a pullback, a higher high, breaking this level, right? So liquidity being grabbed, then a break of structure, then pullback. This would be ideal because if you want to look for a sell side move that breaks structure over here, this would take a long time, right? And that is why we can expect prices to hit higher, liquidate this level, break structure, leaving behind supply zones for us to get involved. And this is where you actually take a trade. You can place a sell limit over here, stop loss above this level, target liquidity lows here, or understand that this is a 4 hours supply, which means to say that you can even go lower onto the 15 minutes to look for the shift in structure over here. Understanding that you are essentially trading the same thing, but on a smaller time frame, right? Wait for the shift, the breaks, the test. Next up, we have the Euro Pound. So you can see currently we are in a downtrend. We have a recent break of structure over here, leaving behind a supply zone here. Prices taps and mitigates perfectly, drops down, breaks a new structure. So with this, we expect prices to make its way higher to mitigate somewhere inside of this level, maybe on a lower time frame, before heading down, right? And this means that we are always looking for sells. But this doesn't mean that we can't look for buy entries. So imagine if prices were to break this level over here. Let's say this is the high, prices breaks this area. We can expect a bullish move into areas inside of here on the supply zone for a continuation downside. So this would be the projection for Euro Pound. So yes, we are still looking for sells right now. So unless prices really breaks this level, we do not expect prices to hit higher into these areas over here. So now, dropping down to the lower time frame, we are still going to continue this bearish move, right? So this is the recent break of structure, leaving behind supply areas here. So if prices were to hit back up into this level, look for the shifts on the lower time frame to catch sells into liquidity lows inside of here. Next up, we have the Euro Yen, and you can see prices are currently moving upside. So if you're to investigate what caused this movement to break structure, look left, and you can see this is an inside bar. So essentially, this demand zone caused the break of structure, right? So prices came back down, taps into demand, break structure over here, right? And now broke structure over here. So with this, we expect prices to make its way down before going higher. So where should prices, or where would prices actually make its way down? After liquidating this high or tapping into this supply zone over here. So prices can essentially move down from here into this demand before moving higher, or makes its way higher, then makes its way lower into this demand zone. So this is where we are essentially trying to trade from, right? Whether it's this demand or whether it's this refined area, both works, right? So are you going to be a buyer here with stop loss beneath this level? Or are you going to be a buyer here with stop loss beneath this level? So there are many ways to execute this trade, right? And for me, I'm looking for a confirmation onto this zone, right? The shift. So if prices were to shift onto this entire demand area, then I'll take the trade over here, right? But if prices were to make its way lower into this demand refined area and gives me the shift, then I will take the buyers over here. So maybe I may have gotten stopped out over here, right? My first trade, maybe I would have lost money over here, but understand that this shifts gives me a range to work with into these liquidity highs before moving lower, right? So whichever that gives me the shift in the structure while tapping onto my valid demand area, I have to take the buys. Over here, we have the euro dollar, and you can see that we are trying to sell, right? Because we recently had a break of structure on the daily time frame, expecting this sell side liquidity to be met. Okay, so now you can see we have a huge wick over here on the daily time frame, which means to say that on the lower time frame we have a buy to sell or a supply zone inside of this. Okay, and now we are going to investigate. So on the 15 minutes, you can see that we are trying to identify unmitigated areas of supply, and over here we have one. Okay, and prices just tapped into this level, gave us a break of structure over here where we could have gotten involved somewhere, and over here as well. So ultimately we are still sell side buyers, right? Because prices broke structure while tapping into our refined area. You can see these two green lines is the 15 minutes supply. So now we can expect a move higher before breaking down. This is possible. You can see all of this liquidity lying beneath this level by means of the trend line, right? So sell side liquidity, and we are expecting prices to potentially hit higher, liquidating this position before breaking down. So this is definitely possible. Okay, so you can see on the 15 minutes, this supply isn't tapped yet. Okay, and this leaves a room or a range for prices to eventually hit higher. What is happening over here? You can see prices just broke structure here, right? Taps into a demand zone, and now prices taps into demand zone. We have a substructure break over here as well, leaving behind what? A demand zone. So with this, we can expect a bullish move upside, right? Continue to break structure, delivering prices higher into this supply area on the 15 minutes before breaking down. Okay, so you could have been a buyer. You could wait for the break of structure over here, the buys of this level, and the same thing happening over here. All of these areas, you could look for buys into this supply area before waiting for the shift to happen over here. So this doesn't have to be a dramatic shift, right? A shift in structure here, breaking the low that creates the high. Okay, then pull back for sells. Next, pound yen. So based off the retail logic, you can understand that over here we have a resistance zone, right? This is a perfect resistance zone. And as a smart money trader, you understand that you are ultimately trying to sell at this supply. So can you see that prices may make its move up into this supply or this resistance area, right? Gives you a shift. Then this is where most of the retail traders are trying to sell from, right? Then prices heading higher into this supply, then breaks down. So if I want to be a seller, I would sell here. Okay, so this means that we are trying to buy into this supply ultimately. Okay, and how do we do that? Break of structure, leaving behind demand zone. Prices comes back down, shift, look for the last sell to buy, and buy up. Break structure, taps in again. So this is going to keep happening, right? Break of structure, taps into demand. Break of structure, taps into demand. So this is going to happen into this supply zone, then wait for the shift in structure to take sells lower. So this is going to bring us down all the way towards this liquidity lows. Ultimately, this is where we are targeting for. So if you are a seller here, are you going to hold your trade all the way down towards this level? You could, right? But you understand that the range that we are working with, you are going to take some partials over here, and all of the liquidity lows over here will be used as your partial profits. Next up, pound dollar. we have a sell side move over here. Prices recently broke structure over here as well. So you can see where is the high that we are trying to sell from ultimately, right? Either this level or this level. So you can see what is so powerful about this area. Prices wicks out, breaks, and grabs all of this liquidity before moving downside, leaving behind potential supply areas here to get involved, because this is a huge wick on the daily time frame. So again, on the lower time frame, there should be a buy to sell move, and this is identified on the 1 hour time frame. So you can see this is a very clean buy to sell move. Okay, trendline liquidity, strong buys, liquidates all of this before breaking down lower, leaving behind a supply zone. So the truth is that I am definitely looking to sell from this 1 hour supply area. So it depends on you. You could have been an aggressive trader, right? If you are an aggressive trader, you can place a sell here and see whether it brings lower, right? Otherwise, always operate on confirmation bias. If this is a 1 hour supply zone, then drop down to the lower time frame to look for the shift in structure. So if prices makes its way higher, you can catch moves, right? You can catch all of these moves higher into this supply zone. All right, breaks of structure, taps into demand, break of structure, taps into demand. So this is just a very generic schematic, right? So ultimately, we are trying to sell from this POI, the shifts, the taps into supply zone, the break of structure, then follow this order flow all the way down. And this is the trade idea for pound dollar. Next up, we have the New Zealand dollar, and you can see over here we have a supply zone. So this is an inside bar. The supply zone is really small for us to work with. So how do we manage to catch a 1:4? Okay, so for those who are trading sell limits, where they have placed a sell limit over here, stop loss above this level, you could have gotten a 1:1.2. So nothing fantastic about that. So how do we manage to catch a 1:4 over here? And for most of the traders, they expect prices to make its way all the way towards liquidity lows over here. And why do they expect this? Because prices broke structure, yes, make its way down, leaving behind sell side liquidity over here. So if prices were to make its way back to mitigate the last buy to sell, they expect prices to drop down into this level for a 1:15, right? And that is the wrong expectations coming to trading. So how do we manage to get involved over here for 1:4? So now we are operating on the 2 hour supply zone. Drop down to the lower time frame. Understand that you want to see the shift in structure. Okay, this is supply. Prices are delivering bullishly. Taps into this area. So we didn't get involved here. Okay, we didn't go to the 1 minute or the seconds time frame to catch the move down over here, right? We waited for the break of structure over here, leaving behind two areas of supply, the first being over here and the second being over here. All right, on the lower time frame, I think it was the 1 minute. So yes, this is the 1 minute supply zone. Okay, and so now traders have a few, I would say, concerns, right? How do we know whether these prices or this supply zone is going to bring us lower into liquidity lows? The answer is that we do not know which supply is going to bring us down to liquidity lows. We understand that this entire break of structure leaves behind two supply zones that are valid to take us lower into the supply or the demand areas or the liquidity lows over here. And what we are trying to do is to confirm this supply as well as this supply. And how do we confirm that? So if you are an aggressive trader, you have two sell limits already. The first being here and the second being here. Okay, so this is the aggressive entries because you understand that yes, we have a break of structure. Currently, this is our sell side move, and any supply areas over here could bring us lower into liquidity lows. But for us, or for the students in Shark Trading Academy, we operate on a confirmation bias. This is an 8 hour supply. We do not know whether this 8 hour supply is going to hold. So we drop down to the 1 minute and look at the price action. Okay. First, prices taps into this area. Didn't give us a break of structure. You can see all of these are lows being respected. The only time prices break structure is here, right? So if prices taps into this break structure here, then yes, we're going to take sells here. Prices didn't do that, makes a higher high. So now the obvious major low would be here. But over here, you can understand that which is the low that created the high. This is the low that created the high. And what is so good about this low? Prices break structure leaving behind what? A demand zone. So traders who are trading on the lower time frame would buy here, expecting prices to go higher. But this failed. You can see prices break structure taps into demand and didn't make a high. Now broke structure leaving behind supply by means of the inside bar. Taps in. Respected again, right? Break structure leaving behind what? A buy to sell. And this is where we got involved. Stop loss above this level. Target for liquidity lows. Here. So understanding that the entire sell move is this level, leaving behind these liquidity lows for us to actually grab them. And this is how we actually get a 1:4. Okay? So if you're interested to know about methodology, how we actually approach the trade, please check out our mentorship program in our Discord channel if you haven't. So now moving down to the daily time frame, what do we expect from New Zealand dollar? I'm still expecting sells because prices break structure here. This high isn't taken off yet. Drop down to the lower time frame. Look for buy to sells, okay, to get involved. If you do not see any buy to sells inside of here, then wait for the break of structure. Over here, swing high, break structure, pull back into demand areas to get involved. And this is how you actually approach the New Zealand dollar trade. Next up, we have the dollar CAD. And you can see currently we are sitting on a demand zone over here. So now prices are delivering bearishly, you can see. Lower high, lower low. So we can expect prices to mitigate some sort of supply inside of here or even here before going down lower to continue this bearish movement, right? So yes, this demand zone is valid because it broke structure, never really came back to mitigate this demand area until this point of time. So this means that we can catch buys, right? We can look for the shift to catch buys into supply zones inside of all of this before prices decides to move lower. So now we're operating on the daily time frame. Go down to the lower time frame and look for the shift in structure. So yes, this could have already been the shift in structure, you can see, right? This move, break structure, may come back to this demand zone to look for buys into liquidity highs over here. So now you can be a buyer here or go down to the lower time frame to look for the shift to catch prices. Lastly, on the daily time frame, what is going on over here? Prices are delivering bullishly here, and we can expect this to make a move higher. Otherwise, come back down towards this 2 days demand area, right? This is our 2 days time frame. Demand area to move higher, right? So again, on the daily time frame, prices are delivering bearishly. Recently broke structure, leaving behind supply zones, and this will not break until prices eventually breaks this level. So the truth is that if you want to be a daily time frame, you have to look for liquidity highs to be met. First, you have to break structure here, which means to say if prices were to break this level, leaving behind liquidity highs, we can look for a pullback into demand zones to get involved to catch liquidity highs over here. Otherwise, look for a lower time frame movement. If prices were to respect this sell move, this buy to sell on the lower time frame, then we can expect lower prices to be met. So this doesn't mean that if prices were to tap into supply zones here, it will break structure. It wouldn't, because you understand that this entire demand area is valid until it breaks, right? Which means to say prices can easily head down deeper into this daily demand, then give us a breakout structure, pull back, catch buys into liquidity highs over here. So if prices decided to continue this bearish order flow to break structure, then we expect sells all the way into this 2 days demand area, then catch the buys by means of the shift in structure, leaving behind demand zones, the breakout structure, demand zones,